your average 20-year-old, for the last 10 years, they've had some sort of exposure to a smartphone. So they've been used to the easy-to-use interfaces from their social media or other applications. So when they come to choose which bank to go for, maybe 20 years ago they would have considered, or their parents would have said, let's go with this big established bank because they've got loads of assets and we can trust them. Whereas now, smartphone generation don't think that way. They think, which one is the most user-friendly and which one am I most used to? And that's why these online banks and fintechs as a whole are doing so well. So when the value proposition becomes around who has a better user experience, not just user interface, the app interface, but user experience end to end, the fintech seems to be gaining ground. And that seems to be the first fintech wave. The second fintech wave, which is just about starting, seems to be fintechs geared towards helping the underbanked and unbanked gain access to services for the first time, which is quite good to see because, again, that is another segment that is, in large part, has been neglected by the large mainstream banks. So some of the mainstream banks are now catching on and understanding their shortfalls and adopting, either through investments or acquisitions or spinning up their own fintech arms, but a lot aren't. And over time, that cohorts of consumers are going to grow older, and so if I were part of a mainstream bank, I'd pay a lot more of a closer attention to it.
When we talk about innovation here at the conference, a big theme has been whether fintechs are making money as they try to take on some of those banks or tech companies, whoever it may be. Talk about your company's view on profitability.
So we definitely are making money. As for whether that's a relevant question, as far as the fintech is concerned, is that, you could argue, was Amazon making money for a long time, or Twitter, or some of these other big companies? Because there's a lot of value in growth, and investors are actually, if you show the numbers and if you show the scale, and you can say, we can become profitable in 12 months, or we can grow by another 300%, like which one? Time and time again, the large investors are at an early stage, want their portfolio predominantly to focus on the growth side. However, it shouldn't be a never-ending chase. So there are certain business models that may possibly never get to profitability. So that is a problem. So there are differences between those who are growth but can become profitable versus those who will only ever be able to just run off growth metrics and never get to profitability, which is a problem that needs to be addressed.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.